Discuss Ind AS 23 borrowing costs. Meaning of borrowing costs. Interest cost and other costs like processing fee or admin fees, which is incurred for borrowing of funds. Cost of equity is not borrowing cost. Surplus funds for qualifying assets. Notional cost of equity is not borrowing cost. If an entity uses its own cash resources for qualifying assets, then notional cost of the cash cannot be used to capitalize the costs that have been otherwise used to earn interest. If an instrument under Section 32 of Financial Instruments as a liability, then cost would be classified as borrowing costs of equity. Uh, Dividend paid on equity shares, cost of issuance of equity shares, cost of issuance of the redeemable preference shares, dividend on preference shares, not classified as liability. Types of costs that can be considered as borrowing costs. Interest expense under EIR method or Ind AS 109. Interest in respect of lease liability Ind AS 116. Exchange difference of foreign currency borrowings can be considered as borrowing cost. In these two cases of Ind AS 23 will not apply. There is accounting policy choice. You may or you may not apply. Qualifying assets measured at fair value. Biological assets under Ind AS 41 uh, uh, would there would not be any borrowing cost capitalization. Qualifying assets which is less than 12 months uh, for its creation. If the qualifying assets is less than 12 months for creation, it will not be classified as borrowing cost. Inventories that are maintained, manufactured, or take substantial period of time to get ready to use, like wine or whiskey, would not act as a qualifying asset. Qualifying asset is one which takes more than 12 months time to create. Core BPO or core principle are directly attributable to acquisition of asset, construction, production for qualifying asset more than 12 months. Then it must be capitalized, not directly attributable or is to be expensed of. Repayment penalty is to be expensed of. Qualifying asset because of inefficiencies, then there exists 12 months, then it should not be a qualifying asset. If the qualifying asset is takes more than 12 months because of inefficiencies, then it will not be a qualifying asset. Example of qualifying assets is PPE, bearer plant, manufacturing plants, investment properties, infrastructure assets, internally generated intangibles under development, inventories that take substantial period of time, like shipbuilding. You have a accounting policy choice. Not considered as a qualifying asset. Financial asset is not considered as a qualifying asset. Inventories is not considered as a qualifying assets. Assets that are ready for sale when acquired. So that will not be considered as a qualifying asset. Borrowing cost eligible for capitalization. A specific borrowing cost specifically to fund the asset, but actual amount utilized for qualifying assets. Uh, Duration period at any point of time. Uh, Example 100 100 lakhs loan is taken and 10 is utilized, then borrowing cost will be restricted to 10 amount. Actual borrowing cost minus income from temporary investments would be the amount of capitalization. General borrowing cost. Example qualifying asset is 100 and borrowed is 1000 and interest rate is 10%. You can capitalize the weighted average cost of capital. 1000 into 10% into 100 divided by 1000. 10 would be amount that can be capitalized and balance would be charged to P&L. Capitalization rate into expenditure on qualifying asset. On 1st April 2014, City Corp starts the development of a property at a cost of 6 million, which is expected to take 5 years to complete. For a um, uh, for a bank loan of 6 million is taken on 1st April 2014 with EIR of 6%. Since the entire fund was not utilized, part of it was utilized. and part of it earned an interest of rupees 1,14,000 for 9 months up to 31st December 2014. What is the amount of interest that will be capitalized at the end of the year? 60 lakhs into 6%, 6 by 100 into 9 divided by 12, 2,70,000 minus interest earned 1,14,000. Interest to be capitalized will be 1,56,000. Assume City Corp is following uh, generally the loan arrangements. ICICI Bank $6 lakh at 9%, HDFC Bank 15 lakhs at 8%, uh, Axis Bank $3 lakhs at 7.5%. City Corp constructs a factory building and which is determined as qualifying asset. Total cost of factory building is 6 lakhs and it would take more than 12 months time to construct. How much is amount is to be capitalized? 6 lakh into 9%, 15 lakhs into 8%, 3 lakh into 7.5%. Total is 196,500. 196,500 into 6 divided by 24 lakhs. That is 48,000 would be the amount that is supposed to be capitalized. Exchange difference, uh, um, which uh, in case a company takes a foreign currency loan, uh, 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 currency loan, the rate as on the date of loan is $40, and the rate at the closing rate, at the closing date is rupees 50. 10,000 into 10 would be the loss. That is 1 lakh. Assume City Corp as the functional currency of INR, and 10,000 is taken at 4% rate. Dollar 10,000 is taken at 4% rate on 1st April 2019. The loan amount is used for constructing a plant which is qualifying asset. At the end of the rate, 50 is the USD rate, and the loan is due for a similar loan borrowed by HDFC in INR has an interest rate of 12%. So increase in liability of loan 10,000 into 50 minus 40, 1 lakh. Interest in foreign currency 10,000 into 50 into 4%, that is 20,000. Uh, uh, Interest liability in case of foreign currency loan 10,000 into 40 opening rate at the date of loan into 12%, that is 48,000. 48,000 minus 20,000. 28,000 is the difference in loan. So the amount to be capitalized is 48,000, which is 20,000 plus 28,000. Foreign currency losses 1 lakh. Additional interest capitalized is 28,000. 72,000 is actual forex loss. Total borrowing cost in foreign currency will be 1 lakh. 1 lakh plus 20,000. That is 1,20,000. Uh, in the subsequent year, if the rate is uh, if the rate is 44, 10,000 into 50 minus 44 minus 60,000, uh, uh, and foreign currency loan would be 10,000 into 44 closing rate into 4%, 17,600, and interest in INR currency would be 10,000 into 40 into 12%, that is 48,000. Difference in loan is 3,400. Gain on loan, exchange gain on loan is 60,000. 60,000, and interest 20k, which was capitalized in the previous year, would have to be decapitalized. 28,000 would be decap, and the amount which would go to PNL would be 32,000. So this is the computation in case of foreign currency loan. Commencement of capitalization. There are three conditions attached for capitalization. Expenditure for the asset is incurred. Borrowing costs are incurred. Activities necessary to prepare the asset for its intended use is in progress. If all these three conditions, expenditure for the asset is incurred, borrowing costs are incurred, and activities necessary to prepare the asset for its intended use is in progress, then interest cost is to be capitalized. Assume that the following events take place. Uh, uh, 15th May 2021, borrowing costs incurred. 2nd June 2021, technical planning begins. Activities necessary to prepare for intended use. 19th June 21, expenditure on project begins. Construction work begins on 18th July 2022. 19th June 2021, when all conditions are met, three conditions are met will be the date of capitalization of interest. Uh, during the extended period, during the extended period of borrowing costs, suspension of borrowing costs. During extended period, active development of qualifying asset is interrupted, then borrowing costs would be suspended. Machinery S1, S2, S3. If the construction was suspended between October 2019 to January 2020 because of certain heavy uh, construction equipment was used at another site, then capitalization needs to be suspended during the period active development was interrupted. Capitalization is suspended if the development of a qualifying asset is suspended because of activity. Certain parts are required to receive. Suspension would continue if substantial technical work or admin work is carried out. Temporary delay is necessary part to prepare the asset for it in the intended use. Then suspension will be not there and it will continue to be capitalization. CT Corp is producing genetically modified seed. Production of such seeds require exposure to right climate and therefore there has to be a wait time for the right climatic conditions. Uh, in this case, there would not be cessation of borrowing costs uh, s- uh, s- since uh, uh, the temporary delays is a part of the asset to be used for intended use. Cessation of borrowing costs. When substantially all activities necessary to prepare the asset for its intended use is completed, an asset is generally ready for its intended use when physical construction of the asset is completed, even though routine admin work may be carried out. If only minor modifications are outstanding, example decoration of property or purchase specifications, it indicates that all substantial activities are completed. Qualifying asset completed in parts. If a water park is to be constructed and phase one, there are four phases for the water park. Then, uh, if each park can be used independently, irrespective of the completion of the other then if one phase one is completed, there will be cessation of interest cost, and when phase two is completed, there will be cessation of interest cost. Phase three is completed, there will be cessation of interest cost, and phase four is completed, there will be cessation of interest cost. Uh, this would not happen if all the phases are interrelated and the costs can be specification can stop only after phase 4 is completed. In that case, there would not be cessation of interest cost and the amount would be capitalized up till phase 4 of the water park is completed. This brings us to the end of the session. Please do like, subscribe the channel. Thank you so much.